We have Mr. Dilip Bhat, founder at Pedigree Advisory, joining us on the show. And Dilip, hi, good afternoon. Good to be chatting with you today. Give us a sense of the earnings impact that we have seen and how the market is overall reeling under pressure. It's been almost a week and a half of earnings so far. Do you expect this trajectory to improve maybe for the remainder of the earnings season?
Good afternoon. I think so far the number of results from the Nifty stable, I think that there will be very few. And as what you all very rightly said, that maybe today and tomorrow you will have some very big heavyweights coming out with the results also. But the broader trend, as what I can see, is that the results appear to be quite muted. In fact, they have been below the expectation on all the parameters. Whether you take tech in terms of the volume and in terms of the visibility, whether you take the banking in terms of the NIMs, in terms of the NII growth, the credit growth. And I think overall, more important is the management commentary of some of these companies have not been all that great as to inspire confidence that immediately in second quarter and third quarter will be something to look forward for. I don't think that is what the takeaway is. So I think that also is playing out in the markets. And as what I've always been maintaining, that there are too many contradictory signals as far as the economic parameters are concerned. And just to take one example, we just heard what the Automobile Association said, that this June quarter will possibly be the lowest in terms of the quarterly sales. Now, without any doubt, the automobiles has a phenomenal multiplier impact in the economy, across the sectors, which I always consider automobiles as one of the benchmark to measure the kind of growth that one can expect in the economy. So this also is not in favor of the markets. So I would say that overall, yes, markets is still begging, looking for a direction, caught in the crossfire of trading in an over-expensive zone and supported by the Indian liquidity. But the unstinted support of the FIs is still missing. So all in all, I think markets possibly can go sideways without any great movement. And possibly we'll have to spend some time. Downside, I don't see any great things to happen. So I think markets may stagnate, may consolidate around these levels, unless until one or two events can just suddenly give a big movement here and there, but that also will be temporary. So I think markets still are not getting the tailwind which it is requiring from this quarterly results so far, and unlikely to do so. That is what it looks like, because I think based on these numbers, you'll see that the Nifty EPS growth, which was around 11-12%, which broadly the EPS growth which people were talking about, I think that also will come under scrutiny.
In fact, the disappointment actually came by, and that unfortunately came by from Axis Bank. They reported a weak set of numbers for the first quarter. Both the profit as well as the NII has come in lower than what the analysts were penciling in. Moreover, the asset quality also deteriorated for the private lender. In fact, Varun is here to try and analyze what the street has made of the numbers. The stock, of course, has fallen a good 5%. But what are brokerages now saying about how Q1 performance for Axis was, and whether or not they're already revising their EPS estimates going forward downwards or not?
Well, so it has been a weak quarter for Axis Bank, wherein the overall gross NPAs have increased from 1.28% to 1.57%, and also there has been an increase in overall slippages and provision. Now, the company says that there was a technical adjustment because of which the overall asset quality has deteriorated, and also the provision and slippages have increased, and that has led to the overall profitability going down by around 3.8%, and also the NIMs declining. And after that, you have several brokerage houses who have actually cut their price target on Axis Bank. For the likes of Morgan Stanley, CLSA, JP Morgan, these are some of the brokerage houses who have actually cut their price target on Axis Bank. Nomura has also cut their price target on Axis Bank, and many of the brokerages have actually gone ahead and cut their overall estimates for FY26 and FY27. Like Antique, they have a buy call with a price target of 1300. They say that the overall results of the companies were weak and they expect the company to deliver ROA of around 1.5 to 1.7 going ahead in FY 26-27 and ROE of around 13 to 15%, and they have cut their earnings estimate by around 8 to 4% for FY 26 and 27. Also, Motilal Oswal, they have a neutral call price target of 1250. They have cut their earnings estimate by 8.6 to 5.7 for FY 26 and 27, factoring the overall higher credit cost and also the margin pressure which the company is facing. Also, they say that going ahead, the NPS might increase by 29 basis point to 12 basis point on a quarter-on-quarter basis going ahead. So that's a risk for the company. And also, Nuvama, they have cut their price target and also they have downgraded the stock to hold because of high volatility in the asset quality and growth, and they have cut their EPS estimate by around 5 to 6% for FY 26 and 27. So results were weak, and also brokerage houses have cut their price target and also the earnings estimate going ahead.
Right, that's that on Axis Bank. Dilip, want you to analyze Axis Bank's numbers for us, because clearly it doesn't seem like it's a banking sector issue. It's a one-off for Axis Bank. But does that really sort of hunker down expectations on what we might hear over the weekend from ICICI Bank or HDFC Bank by any chance?
So I did heard and I did see the fact that they definitely spoke about some technical matters because of which some parameters have gone haywire. But I would say more than that, I would look at something like what's happening to the NIM. I would see what's happening to the credit growth. I think they've all been very muted. And I don't think that the management did, the management commentary was anything great in terms of inspiring confidence. So I would say that my own sense would be that they would still require something more to do and to give some better visibility, which is missing totally. And I think that is what I think is generic across a lot of banks and a lot of companies and across a lot of sectors. So I would wait and watch for a while in Axis. I don't think that Axis Bank deserves an investment buy from the current levels.
Right, so that's the take coming in on Axis Bank. Even the management commentary is not giving that much of a confidence, and that's visible on the stock price as well. No substantial recovery from the day's lowest point.